Uh, let's talk about my uncle right above John D. Rockefeller, my man. No, that's not my uncle. But the man he's basically all of our uncle. The man ended up creating the schooling system, and that's why we're all where we're at. No, we're not just going to put all the blame on him. But my man does have a huge impact on the schooling system and the financial literacy or illiteracy out there, wanting to create a schooling system that keeps the wealthy wealthy and the poor poor. We know all now times are getting worse. It's harder than ever. To buy a home. Inflation is at an all time high. It's crazy out there, and being able to create an emergency and opportunity fund by utilizing cash value dividend paying life insurance, a strategy that my man right above ended up implementing with a strategy. So let's talk about the crisis out there, financial literacy, and let's implement these strategies and at least talk about these strategies. So let's get it. And getting into it, we've all been told the same thing: having an emergency fund, having at least 6 months of a savings, which could be in case we lose our job, in case of a couple of health issues. Well, I believe a true emergency, instead of losing our job, would be you're laying up in the hospital, looking up at the top of the bed, and you're just wanting to be healthy. You were just diagnosed with cancer, heart attack, you need a huge medical procedure, and you're finding out that your health insurance that you've paid for all this time is not going to cover the life-saving procedure that you need, and you've already taken a couple months off of work and you're running out of funds. And not only are you having to pay the bills that you're not paying, because bills still stack up no matter what, even if you're sick, even if you got cancer, even if you're, doesn't matter what the illness is, but being able to have an emergency fund that you can have access to at any situation, doesn't matter how critical the disease is, by us attaching an accelerated death benefit rider to your whole life policy, what you can do is access your death benefit, the money that would be going to your beneficiary, because they, in their hearts, would imagine that they would want you to use the money that would go to them to guarantee you get that life-saving procedure, or you get that life-saving cancer treatment, because we know our health system is flawed. They like to fix the symptom and not fix the solution, and basically put a band-aid on it and prescribe medications and give us a health directive that's not gonna make us last. And it's tough. And when we're in that true emergency, guaranteeing that we have liquid capital at any moment's notice to make sure that our health directive and what we want to happen when we need it to happen is guaranteed, is what a true emergency is. And that's what cash value dividend paying whole life insurance can give you. Can I get a if you're still with me? Well, thank you for still watching this. We're going to get into opportunity fund. So opportunity fund, how keeping our money with the banks in a savings account, you're only getting 0.5, 0.6% money. Keeping our money in the banks, traditionally, that's what we're told. Keep your money in the banks, it's safe. The banks are using our money, leveraging it, and getting better growth than us. So why is this information not out there? Because no one wants you to do what the wealthy are doing. No one wants you to create generational wealth. Well, instead of putting our money in a savings account, let's put our money in a cash value dividend paying whole life policy where our money keeps up with inflation, guaranteed growth, dividends paid yearly, not subject to litigation. So if we were to ever get sued or someone wants to come after this money, they can't have access to it because it's under that safety umbrella. So we're guaranteed this money is safe, secure, liquid, and available when an opportunity comes, whether that's college, it's real estate, laundromats, vending machines, any opportunity that wants to come your way. Being able to come to that opportunity stronger than a regular investor who is using a HELOC. I might be stepping on some toes here, but with a home equity line of credit, your policy is your loan, not your policy, but you're looking at 9 to 10%, and it's volatility with the market. You're looking at in 2008, most of the people using HELOCs weren't able to use it because it's tied into the market. So being able to have an account that you can use at any time when it's the worst in the market, and you have access to capital that you can use whenever you want, that's why I love cash value dividend paying whole life insurance, because when it's the worst time in the market, that's when it's the best time to buy. So I'm here to share about opportunity, about cash value whole life dividend paying life insurance. Thank you for watching this with me. Hope you have an amazing day. Stay safe and appreciate you. Go crush those goals.